Chocolate Finance halts instant withdrawal due to high demand. Chocolate Finance CEO says withdrawal issues stem from Miles' rewarding system being heavily utilized. Chocolate Finance to process withdrawal in orderly manner, all funds remain protected. For the past couple of weeks, you probably have read some news about this company called Chocolate Finance. Initially, actually, I don't know what the company is doing, but let's go to the company's website and see what is their marketing pitch. Enjoy 3.3% per annum return on the first 20k. Sounds quite attractive, and here it says licensed by MAS. And if you scroll further down the page, you will see the amount of money you may collect if you invest with them. Now, bearing in mind that Chocolate Finance is not a bank, but they are a fund management company. So the most important thing is to look at this fine print over here. So if you zoom in to the fine print, here it says projected return. In other words, it's not guaranteed return. Now, this return is currently supported by a promotional top-up program valid during the qualifying period and subject to terms and conditions. So you're supposed to click to learn more. And remember, these returns are not guaranteed. And the principal sum, right, is exposed to market risk. So if I may summarize, your reward is 3% per annum, not guaranteed, and your risk, which is the market risk, and the maximum, which is the worst thing that could happen, is you may lose 100% of your capital. Then the most interesting thing is the other slide. It also further reminded you, is the money in Chocolate Finance account safe from capital losses, and can I lose my principal amount? So I think Chocolate Finance is pretty honest, right? They say the money you put in your Chocolate Finance account is not safe from capital losses. So again, maximum loss, right? 100%, reward 3% per annum, not guaranteed. So now the question is, how does Chocolate Finance help you to make money? Here it says, number one, we invest in bonds globally. Number two, they adjust the duration to increase their return. I'm not sure specifically how they do it. And of course, this is quite interesting. We put money where our mouth is. And here again, they reminded you the risk. There are no guarantees in life.
There are no guarantees in life.
So now the question is, other than Chocolate Finance, is there a better deal or at least an alternative investment? So if you go to the MAS website, actually MAS has three investment products, and one of them is called T-bills, which is treasury bills. So if you like something that is really short, right, you can check on these T-bills, and you can see here 3-month short-term T-bill, 6-month T-bill, and then 1-year T-bill. If you invest in such short-term T-bills, what are the possible return, right? There are some T-bills that are being issued, which is around 3%. So comparable to Chocolate Finance, 3%. And here, they use the word cut-off yield. Now, bearing in mind the return for MAS for T-bills is actually guaranteed versus the non-guaranteed return by Chocolate Finance. So just take note now. The SGS T-bills in fact, they are protected by the government. So unless Singapore's government collapse, your sum, right, is actually guaranteed. And then here it says upon maturity, right, investors receive the face value. That means you get all your money back. So reward X% guaranteed by the government, risk, right, 0 because it's protected by the government. So now the question is, how does this T-bill actually work? For example, if you're the investor and you use $1,000 to buy something called the T-bills. And the interesting thing is, if the cut-off yield is 3%, so instead of paying $1,000 for T-bills, you actually pay $970 for the T-bills. And upon maturity, what the government will do is they return you back the $1,000. So you buy $970, and then you receive $1,000. So the difference, right, which is the gain, is actually $30. So you can call this your earned income, capital gain, and so on. And this amount, remember, is guaranteed. So the key thing for any investment is really to ponder through the process, read through the fine print, and then eventually we have to make a calculated decision. So with T-bills, right, and Chocolate Finance offering to you, you really have to think it through what really makes sense. So the interesting thing is, other than T-bills, which is offered by MAS, there are also many other products that are offered by MAS, for example, the Singapore Savings Bonds. So if you want to know exactly what Singapore Savings Bonds is all about and then T-bills in detail, I would highly encourage you to go to our website, valueinvestingacademy.com/ETF. Just key in your name and email, and then you'll be in our database. So what is going to happen is, if we have an event, which is a webinar talking about Singapore Savings Bonds and T-bills, we will email you. And the best part is, after you key in your name and email, you receive a free guide on how to invest in ETF the Warren Buffett way. So again, share your thoughts on this video politely and respectfully, and I shall see you in our next video. See you soon. Goodbye.